Okay, folks, welcome to Sunday Night Stock Charts Live. This is Bob Desmond, and welcome. Another weekend, another Sunday night. Thanks for being here. If I could ask everybody, smash that like button. I'd really appreciate that. Thank you very much. Did a little bit of yard work today. Need a haircut. Gained a few pounds. Got to work it off. I can't wait for this nightmare to be over. I go out. I hadn't left the house in a couple of days. I went out on Friday, and everybody's wearing a mask. I couldn't believe it. It's surreal, the environment that we find ourselves in now. And who'd have thought 6 months ago that this is where we would be in April of 2020? It's just amazing. So let's go through who's here. Seymour. Hello, Seymour. Oliver. Apple ready for another leg up? Possibly. Mark. You read something, your sentence got cut off. Welcome aboard, though. Will, Franklin, welcome. I read something yesterday that Mark, your sentence got cut off there, pal. Nicholas, salute, Bob. Another week to infinity and beyond, no doubt about it. They have to. They have no choice. If they stop printing, the party's over. Eric, hi. RL, Danny, all right. Amerimigo 1, love that name. Please reboot 2020 this week. All right, will do. All right, let's take a look at the futures market. Let's get a feel for where we're at. We'll begin with a cursory overview. This is a 4-hour chart. These will all be 4-hour charts. We're down about a half percentage point. You know, I'm not going to get all too worried about the drop right now because on Friday, we saw a bullish reversal bar, that final 4 hours of trade, as you can see right here. So all I'm going to do is take my crayon out, draw it down, and there we have it. I don't think that we're done going up yet. And the number one question I am asked, do I still believe that we are going lower? No doubt about it. The second most question that I'm asked, are you still short and when are we adding? Basically the same. Yes, I'm still short. No, I have not added. And I want to wait for the bearish reversal day. What does that mean? What that means is that we wake up. This is what I picture the blow off to be. We wake up, we have triple digit futures green on the Dow. The S&Ps are up big. Everything's up big across the board. Then, whether it be an hour into trade or by the end of the day, we have reversed and we are trading much lower on the day. A bearish key reversal day. We don't have that right now. I was looking for it on Friday. I thought we might have it on the trip Qs. It didn't happen. They finally came in. They bid the shares up, that final half hour of trade. And that's the most dangerous part of the day, is that final half hour of trade. And you need to. Don't front run this market to the short side. Don't do it. They want you to do it. It's part of the game. They want you to get excited, short into it. They want you to picture that double bottom setup, big sell-off that you're going to make a profit on your short side. Don't do it. Wait for the market to send you a signal. So S&Ps coming off the lows slightly here. The Russell down a little bit more. So I think what they're going to do this coming week is that despite the fact we did not get a reversal on the Chip Q names, and those are the names that are leading the market higher. In particular, Apple, Microsoft, Amazon too. That's the market at current. As goes Microsoft, Apple, Amazon, so goes the rest of the market. But they could pause their upward momentum, and I think that we could see money rotating into the small caps, and yes, believe it or not, the banks. And I'll talk about that more in a moment. So we haven't broken support yet. Yes, we're down just shy of a percentage point, we'll watch it. I'm not going to get all too excited. The NASDAQ 100 down spot 4 or 5%, holding support. So what we're going to do here is just simply draw resistance levels. You can see I already have support drawn. We are putting in a lower high on RSI, but this could quite possibly be a double bottom setup off of support, and we can move higher. So you can't short this just yet. It's not a broken market in the short term. Taking a look at the dollar. The dollar holding the rising 20-period moving average. We're down slightly versus the close on Friday. Looking at gold. Gold down yet again. Now, we sold our... Can you folks still hear me? If you could just give me a thumbs up, or yeah, you could hear me in the chat box, I'd appreciate it. Hey, Eric. Good, thanks, Will. Appreciate it. I got disconnected there for a moment. All right, so gold, I've been worried about. We sold our silver position last week. We sold a good portion of our gold miners last week. We booked profits there, and thanks to all. I appreciate it very much. And I was worried about deflation. And sure enough, gold broke down last week, and you could see that we were seeing topping tails last Monday. Then we broke support, and we just drifted lower. Finally, we broke late Thursday into Friday. We're at support at current. We flashed a bearish key reversal on the week last week. I think we can get lower lows on gold. However, I'm going to go to an article that was published just prior to me going live that has me a bit concerned about the early signs of inflation already. I'm going to go to that. Let's check out Bitcoin. It's broken out. So Bitcoin had been consolidating in this trading range, and we have now broken out on the session. We are now up about 1.5%, 71.85 the last print on Bitcoin. And Bitcoin, this is funny, I just mentioned inflation. Our analysis of Bitcoin, we always look for a correlation of what influences whatever we're trading. In the case of Bitcoin, inflation influences Bitcoin. I did some analysis a while back about how the CPI correlates with Bitcoin. And you can see, I just mentioned inflation, and at the same time, Bitcoin is now breaking out. And I'm going to go to an article in a moment, and I'll talk about that. Silver, we are up on the session, but you can see that we broke support last week. We sold up here, and we were buyers when nobody wanted silver. Down here, nobody wanted it. So we booked those profits. I want to get back in, but ideally at lower prices, or if we recapture support. So I think that longer term, the bull case for gold, silver, the miners is still very, very strong. I'm just worried about a short-term bout of deflation. And that'll give us an opportunity to take another bite at the apple, ideally, though, at lower prices. Let's take a look at bonds. Okay, so bonds are steady. They're up. Therefore, yields being pressured. Let's come back to the futures in a moment. Let's let everything settle down, and we'll come back and see whether or not we weaken here or do we rally. So I was talking about And I had so much to go over here. I was talking about my concerns about deflation, and then I pull up this article. This was just printed minutes ago. Meat prices subtly surge as food processing plants shut down with thousands of tons left to spoil. So these are your early indicators that we may have a problem out there. And if you take a look at the DBA, and I didn't plan on going over this chart, this is not a meat ETF, it's an ag ETF. But I'll tell you, this chart is firming up. The monthly chart doesn't look that good. The weekly chart looks better. The daily chart looks really, really good. So here's the weekly chart. We've stopped going down, meaning, yes, we were down last week. However, we're not putting in new weekly lows. We're seeing bottoming tails. That's a sign of support. Possible double bottom setup on stochastics, RSI, higher lows, daily chart. This is where it gets interesting. Take a look at your RSI. Higher lows, W formation on Stokes, higher lows, and we're firming up here. All we need now are price increases, and you're going to see the DBA take off. So this is on our watch list. We were long of it up until the trade wars, and we got out. Now it's time to revisit the DBA. I digress, though. All right, so let's go over some comments from the Oracle of Omaha. Only when the tide goes out do you discover who's been swimming naked. Now, this is what's been missing from this new bear market, this new depression, is we haven't had our Lehman moment. We haven't had our Bear Stearns moment. Why? They won't let it. The Federal Reserve won't let it happen. They won't let us find fair value. That's why everybody's scratching their heads wondering, why the heck is the stock market up so big off the lows of the year? Why are the triple Qs positive on the year? Think about it. I digress. So the news comes out. This is the reason why I bring up this article. Over in Asia, so it begins. Asian oil trading legend files for bankruptcy after hiding $800 million in losses, secretly selling loan collateral. Fast forward. This is not so much of a swimming naked, but the bankruptcies are now becoming more and more high profile. This is 24-Hour Fitness. They just finished a beautiful, beautiful new gym a couple of months ago, not far from my home. I was going to switch over to them. And they have just filed for bankruptcy. Why? Their debt load. They have an $837 million term loan maturing in March of 2022 and a $500 million unsecured loan maturing in June of 2022. So they're gone. Well, they may not be gone. They're going to need to restructure. So a lot of people are going to get burned. Economic data coming out this week. Not much in the front end of the week, but you're going to get the Chicago Federal National Activity Index coming out tomorrow. Then, of course, the big number. Nobody cared about initial jobless claims 6 weeks ago. Now it is the weekly popcorn moment. Everybody has to watch. Not that the market cares. You could have 10 million people laid off. I guess they'll rally it on not being 11 million. You can't figure it out anymore. So we have the weekly jobless claims, a lot of Fed activity on Thursday, Treasury auctions, and then on Friday, durable goods. For those not familiar, durable goods orders, those are your large ticket items, refrigerators, washing machines, etc. Items that are meant to last several years. We'll see just what a gut punch that's going to take. Then we're going to get consumer sentiment on Friday as well at 10 a.m. So not that the Federal Reserve is going to let the market dictate where the stock market goes. Why should it? They will make certain that this market stays up higher for as long as they can until they lose control. Now, here are some headlines that I want to segue into the charts with. And I've been asked about time and time again, are we going down lower? Yes, I think that we are. It's just a matter of time. Philly Fed collapses by most ever to 40-year lows. I'm not going to go into the headlines. The article, the headlines are enough. This is a fact. Housing starts collapsed by most in 36 years. I was surprised that building permits were not weaker than what they were. That being said, building permits are a forward-looking indicator. Just because a builder is granted a permit does not necessarily mean they're going to break ground. So, while the building permits were better than expected in my eyes, it doesn't necessarily mean it's going to translate into new housing starts. So, I'll focus more. Usually I focus on building permits. Right now I'm going to housing starts. Are builders going to follow through on those permits? I doubt it, especially with JP Morgan Chase tightening up lending requirements and other banks soon expected to follow suit. I don't know what's going on here tonight. Okay. The stock market is now just 5 stocks. S&P now more concentrated in top 5 stocks more than ever. And those are your FANG names. FANGs in the aggregate are at record highs. Think about that. Think about it. Goldman now sees a 123% plunge in Q2 S&P earnings. $850 billion drop in corporate spending. This is a tsunami. This is horrific. And you would think that the markets would react and allow they would want to find fair value. They say that the markets are forward-looking pricing mechanism. That's no longer the case, because when you take a look at where we're at, and I keep dragging out this chart, but when I first started talking about the PE, the overvalued, fair value, and undervalued lines here, red being overvalued, this is the zoomed in version over here on the right, blue being fair value, green being undervalued. When I first started talking about this, we were in the middle of the red line, again, overvalued, and the blue line being fair value. And I said, wait until earnings begin to come out. We are going to skyrocket higher, and we're going to be overvalued in a blink of an eye. Think about it. We've only had about a week and a half of really just bank earnings. Take a look at the S&P 500 relative to its overvalued mark. We are so extremely overvalued here, and nobody cares. Nobody cares, especially the Federal Reserve. So, what are the correlations between where we're at now and prior bear market rallies? History may repeat itself. Everybody knows this saying. History may not repeat itself, but it certainly does rhyme. And I think that's the classic case that we're looking at current. So let's go back to the 2000 financial crisis, or the dot-com bust, I should say. Where did we peak out during that bear market rally? Where we peaked out was, I'm using the Bollinger Bands here, and this dotted green line is the 20-period moving average. And where we peaked out on that bear market rally was right at that 20-period moving average, which was flattening out. Fast forward, and then, of course, we rolled over, broke down to new lower lows. Fast forward to the financial crisis, where we rallied off the lows. We hit the lows here in March of 2008, rallied up to, what was our rally here? Comparatively nothing relative to what we're doing right now. About 15.5% rally off the lows. And we were stopped dead. Where? right at that 20-period moving average, which had just flattened out. Fast forward to present day. Where are we at right now? We're just shy of that 20-period moving average. And to be specific, where is that 20-period moving average in numeric terms? Right here. 2,889 spot 36. Where do we close out the week? 2,874 spot 56. Now, if anything, do I think that given the fact that we have a Federal Reserve that is providing so much liquidity into this market, pumping it in there, not allowing the market to find fair value. And one thing that's different today relative to prior bubbles is that banks, institutions, when they went to the Fed discount window and they sought to borrow money from the Federal Reserve, normally they had to bring treasuries, AAA grade treasuries, or debt of similar quality. And the Federal Reserve would lend money as collateral on that paper. Now all you need to do is bring grandma's kitchen sink, which may be an antique, and they'll loan you money based upon that. In essence, they're accepting stocks at the discount window. They're taking it as collateral. So unlike prior bubbles, and if you're wondering why this market has so much momentum prior to previous bear market rallies, the Federal Reserve is holding stock as collateral. And what else do you have now that wasn't as prevalent back in 2000? It was certainly prevalent in 2008. What you have are the algorithms. And all they're doing, the algos are simply chasing momentum. That's it. And once that game of musical chairs stops, well, then they'll go to the short side. But right now, those momentum algos, all they're doing is ignoring that, because they don't have to. They're programs, for Christ's sakes. They don't care about 5 million people, 6 million people, 20 million people over the past several weeks being laid off. They don't care about the headlines with economic data at 60, 40-year lows. They don't care. What they care about is the momentum of the market and the fact that in the final half hour of trade, volume surges and stocks finish at the highs of the day. That's all that matters at current until it doesn't. So, do I go shorting tomorrow if we see a weak open? No. We're not even at that 20-period moving average yet. And if anything, we'll probably overshoot, I'm thinking, to the 2950 level on the S&P 500, and then you see how the market reacts. Now, when we roll over, where's the bottom? I don't know. I really don't know. All I know is this, is that the Federal Reserve tried to take their foot off the QE brakes back in 2018. That didn't end very well, right? And 2019 as well. It didn't end well. So they're back in full force. If they take their foot off the gas at current, you're just going to see a cascade of selling here. And it's scary, to be honest with you. So let's take a look at some comments here. Fed algos, Fed funny paper money. Yep. Do you use VWAP for tracking the algos? I do to a certain extent, not to a great extent. My friends over at TrendSpider, they're big on that quite a bit, and I'm trying to adopt it a little bit more. I'm even using their, let me put them in front of you so you can get an idea of what I'm talking about visually, is they have what you call Raindrop Charts. And they're a mixture of VWAP and candlestick charting. And I find myself referencing them more and more nowadays. I don't want to go into deep detail with them. Just to answer your question, I don't use VWAP a whole lot. My friends over at TrendSpider do. They try to talk me into it all the time. And I'm listening. I'm learning. I don't want to adopt it and go public with it right now because I just don't know what I don't know yet. So more and more, I'm adopting it. Yes. Hey, Pat. RL, I think the market will go down again if we get resurgence of cases. Yeah. Hey, John. TA. Hey, Bob, would you mind sharing the PE chart link? Yeah, sure. Absolutely. Let me know if this doesn't open up for you, and I'll get you out a special link. Okay? TA, let me know. All right. So, next up, I want to talk about the end game. And I debated quite a bit about whether or not I was going to talk about this. And one of our fellow members, Charlie, was texting me last week. As a matter of fact, we spoke, and we were talking about the end game. And I said, Charlie, I said the end game, unfortunately, is probably going to be one that is going to be pretty nightmarish. And I think that the game has really already begun. The end game has already begun. And he said, what do you mean? And I think that what we've seen so far is the Chinese are ramping up their propaganda machine, trying to make us the bad guy. And it's not going to end well. And what got us out of the Great Depression was not FDR's New Deal. It had nothing to do with it. All the New Deal did was prolong the Great Depression. What got us out of the Great Depression was war and the rearmament of the globe. That's what we did. We became the manufacturing hub of the world, and then we went to war. And unfortunately, we've been in a war with the Chinese for quite some time. It's either a intellectual property theft war, certainly a trade war, cyber war, and now one could argue that what we've seen out of and I don't mean Chinese people individually, I mean the CCP, Chinese Communist Party, those individuals alone, they're a cohort of thugs. And how we as a globe can do business with these people again in the future, I don't see how that's possible. And the only reason why I'm bringing this up tonight is because Kyle Bass, I'll share this link, and I suggest that everybody take a moment and go through Kyle's YouTube videos. And he's just been spot on. And he's got a video embedded in that link. And Kyle just tees off on the Chinese Communist Party. And then you're seeing more and more headlines like this. Did Xi Jinping deliberately sicken the world? More and more eyes are going to be on the strain of virus and what happened over in that laboratory. And at some point in time, either they get really, really contrite, or we have a real serious new Cold War on our hands. And you're going to have to look to countries like Vietnam to benefit, to a certain extent, the United States. I don't think that we're ready yet to offer the type of discounts tax-wise to attract business back here. And I've always said that if I became president tomorrow and I had if I had control of both the House and the Senate, what I would do is I'd take a crayon out and I'd take a map and I'd say, okay, here's the old Rust Belt from Cincinnati up to Buffalo, Rome, New York. Rome is the copper capital of the world. It was at one point in time. The sign is still up there if you go up to Rome, New York. I would take a crayon out and I would draw a circle around it. And I would say any company that comes from overseas or wherever, you put your manufacturing here for the next 30 years, you don't pay 1 penny of corporate income taxes, driving down the cost of doing business in the United States dramatically, making it attractive. Until we get to that level of aggressiveness, I think that we're kind of doomed in the short term. So when I take a look at China, which we're looking to short, and I've been vocal about this, And I was asked a couple of weeks ago on Sunday Night Stock Charts Live about Yang, which is a leveraged ETF putting you short of China. Was it time? I said, no, not yet. We're not ready yet. And this is the Shanghai Composite Index. And I want to point out that the Shanghai, because remember, on the curve, the Chinese are well in advance of us in terms of coming out of this crisis. And generally, our stock markets trade in tandem. They'll diverge from time to time, but in general, they trade in tandem. And they bottomed out here. January 2019, bear market rally up to, what was it? It was a 39% rally to 32 from 24. There we go. 39% rally. A big rally, 947 points on the S&P 500. Where are we now on the S&P 500? We're at about 34%. So we still have a little ways to go to meet their bear market rally. So this is not unusual what we're seeing right now relative to what happened over in China. Now, the Chinese, that bear market rally has failed. Have they broken down to new lower lows yet? No. They've been consolidating. They're certainly off those highs. They are putting in lower highs, but they're consolidating. You could argue that they have a bear flag setup forming. I would point out, though, that at current, when you see a rally up into the 3,000 mark on the Shanghai Composite, you're seeing sellers move in, topping tails like you saw last month, the prior month, the month prior to that, which was January. It failed. It couldn't hold 3,000. So while we're up on the month thus far, so are the U.S. markets, and plus their economy is beginning to open up. The question is, do they hold or do they break? That's the reason why I'm not ready to short China yet. I will be looking to short China on a break of the support level or a new monthly low versus the lows of March. So more to come here on China, and we'll be looking to short using the YANG. Leveraged ETF, putting you short of China. You can see that we're very close to the lows of the month. This is not ready to be bought just yet. Weekly chart. Both lines on Stokes down below the 50 level. And going back to the monthly chart of the Shanghai, I forgot to go over this. Let's point out that what we're seeing here are lower highs on our Stokes, lower lows as well. Lower highs on RSI, lower lows as well. So momentum, while we're up on the month, it's still losing momentum. Okay, where was I at? Let's go over a couple of stock chart requests. I have a few to go over here. OSTK, PRTY, LOVE, UNG. And we will go back to the futures before we sign off. Pat, I am wound up, yeah. I took your advice. I went out into the yard today. I did a little bit of yard work. Check out Danielle DiMartino Booth. She's great. Love Danielle. Larry, good comment. She's wonderful. Love her. I think it trades inversely of the Yang. The question is, does it trade inversely of the Shanghai or the Hong Kong index? I believe it's the Shanghai. Don't quote me on that. We'll look into it. We'll find out. But I believe it's the Shanghai. Could be wrong. All right, let's go over some chart requests. We'll use our friends over at TrendSpider. If you want a discount to TrendSpider, there's a link down below in the description box. Use discount code, I think it's down there, CT25Z. That's it. All right. Party City. I looked at the financials here. They have a lot of debt. A lot of debt. So I'm concerned. We're at the lows of the month. No new monthly low. So that's a plus. We have a possible double bottom setup forming here on the Stokes. Same deal here on RSI. There's not a lot of data here on the monthly chart. Certainly no historical support below the reference. So I'm not going to lean in. I'm not going to rely upon this data too much. I'm going to have to drill down and rely more on weekly data and support. So we have support levels here we're holding. Would I buy? Probably not. We're in no man's land. I'm not seeing a catalyst. You know, the best that can be said here is that we've been putting in higher lows and not even really higher highs. I mean, we're just forming a pennant formation, and it could be a bear flag formation. We could break here. I don't like the setup at all. Daily chart. A lot of resistance above. And I'm not a big trader of penny stocks. There's a reason why they're penny stocks. You know, if you get a breakout above 45 cents per share, you know, that would be a good entry point, assuming we close there. You do have a multi-day short squeeze potential here. I looked at the data already. Higher lows in RSI. I can't buy these shares unless they break out and close above 45 cents per share, or unless they pull back to this lower band of support, which would be at around 34 cents per share. That's a major drop on a percentage basis. So, I can't buy these shares. I see nothing. I see a lot of red flags, to be honest with you. The tremendous amount of debt here on this company. Overstock. Now, Overstock had a very, very good week last week. We tracked it. My concern is that is it an also ran tracing the Amazon story? Now, on a monthly basis, we are above resistance. We are breaking out on RSI. Stokes, like a coiled spring here. Hooking up. Looking good. The key is we have to close above this resistance level. In fact, I would say this. We need to close above $9.66 per share. That would put us above these topping tails we saw a few months ago. Those are your sellers. We want to be above them. We want to see that this stock has enough rocket fuel to get through that resistance. If it doesn't, we have nothing to lose. We didn't buy it. So it's a show me stock. It has to show us it can close above that resistance level. If it does, we'll set an alert here. We'll get notified. I don't care if it touches or it bounces. I care about the breakthrough. That's it. Forgot the T. All right. We'll keep this active for next several days. We'll see what happens. Daily chart. All right, so you can see on a daily basis, here's that resistance level. We rallied right up and into it on Friday, then we backed off. It's a show me stock. And if you want to use the VWAP I mentioned earlier, integrated with, this is interesting. These purple raindrops, that's a sign of indecision. We're making you break either up or down dramatically in the next couple of days. Let's drill down. This is when you see a purple raindrop, it's like a doji formation. It's a sign of indecision. Get ready for a directional move one way or the other. Let's go with a 2-hour chart. drifting down. So the story remains unchanged here. Do we recapture 966 per share? If we don't, well, then we'll probably pull back. We want nothing to do with the stock. So $9.66 is everything for this stock. If it doesn't close above it, I don't care about it. It's a show me stock. And in this market environment where we're looking for the next leg down, these third-rate stocks are going to take it on the chin first. So be very, very careful here. LOVE. The Lovesac Corp. We'll come back to the intraday chart. I like it. I don't like the daily chart, that's for sure. Let's go to the monthly first. Good month so far on the month. It's an outside reversal month. We cleared last month's highs. The question is, do we hold these gains or do we fade, right? That's the big question. So use caution. The monthly chart at current looks good. We're over the halfway mark on the month in terms of trading days. A lot can happen between now and the end of the month. So let's not rest on the laurels and go buying the stock based upon monthly price action. It's not enough yet. The month is not over. Weekly chart. We had a breakout. So what we want to see here on Love is not a continuation move higher. And I don't think we're going to get a skyrocket out of the gate open on Monday morning, even if the S&P 500 and the Russell 2000 opens up strong. Why? It's because you have the 50-period moving average, which is acting as resistance. And what you also want, you want to pull back and a retest of this breakout point. So you want to retest here. You want to see what was resistance last week and prior weeks is now support. Then, once we begin to rally to new highs, then you begin heading more aggressively. But not until then. Be very, very careful in this market environment. Daily chart. We're extended. We closed out the week leaning into the third standard deviation Bollinger Band. We sold off the highs of the day. That's not a shock. RSI still looks good. Stokes look good. So I think it's a healthy chart, no doubt about it. A little bit extended. We want to see that pullback and a retest of weekly support. So where is that weekly support? Let's bring up a 4-hour chart. Let's take off the 4-hour trend lines. And let's bring up weekly overlays here. Now, this is the power of TrendSpider, is that I'm able to set my alert. It's going to make me go to the weekly chart. Touch, bounce, LOVE. Okay, so we'll keep this active. This is going to happen within the next 5 trading days. And we're good to go. There's our alert. Once we get a pullback and a retest, then we'll know that it's safe to go into Lovesac on a successful retest. What else do we have? UNG. Oh, as a matter of fact, what I'll do here is, let's go to the weekly. Charlie, I don't know if you're out there, but if you're watching this, there's that chart for you. Okay, UNG. Let's go over to, let's see what Nat Gas is doing in the evening session here. Nat gas had an explosive week last week. There we go. I thought I had it ready. I didn't. So again, this is a 4-hour chart. No new weekly high yet, but they did bump it out of the gate. We're off that high. But we're still catching a bid here. This is a 30-minute chart. All right, so they're gonna keep pushing nat gas up into the new trading week. So let's go to the static charts. Let's go to wrong chart. There we go. As a matter of fact, let's go with the monthly chart first. Interesting. Just for the record, Thursday is nat gas inventory report. Every Thursday, 10:30 a.m. Eastern Standard Time. So just be aware of that. All right, so the monthly chart is showing a sign of stability. I mean, this bear market, we're still firmly in a bear market, no doubt about it. Firm, not going anywhere yet. Weekly chart. Now, on a weekly basis, is a lot more interesting. What we're trying to do here, here's our long-term downtrend channel. They're trying to break it out. They've been failing. They successfully did so back here the week of March the 9th. And you had a breakout point failure or a bull trap, whatever you want to call it. We pulled back, reversed. I'm surprised we didn't retrace all the way back down to the bottom of the channel. That's a sign of strength. So we have no breakout yet. I can't buy nat gas just yet. I need to see a breakout on nat gas above this upper band of resistance. Daily chart. Friday was an indecision day. I think we need to see a close above 14 on UNG before we got long. I mean, Stokes are beginning to firm up here, still about down below 50, but they're beginning to hook up. RSI is looking interesting. It's putting in higher lows and higher highs. Good stuff. Are we out of the woods yet? Not quite yet. Not quite yet. So this is a show me commodity. And with so much industry shut down at current, you have to worry about capacity, just like with oil. I mean, you have tankers that are floating out there holding oil. All there are now is storage vessels. So you have to wonder about the same thing for nat gas. So it's a show me commodity. It has to break out. I would like to see it close above 14 to 14.32. We close above that level. That makes it interesting. Then I would look to buy it at current. I certainly wouldn't short it, but I wouldn't buy it either. What else do we have? Somebody brought up HAL, AMD. Now, Halliburton's had a heck of a run off the lows. I was eyeballing that, and Apache as well. All right, so Halliburton on a weekly basis, it may have some more upside movement to go here. We're in a bear flag setup, and stiff resistance is going to come in at around between 10.40 and $10 per share thereabouts. So we possibly have more upside movement here. We were down last week. Daily chart, nice day on Monday, Friday. But beware, it broke down below support on the 14th. This prior support level is now going to become resistance. So does it fade? All you need to do is look at oil. You know, if oil fades again, we break down to new weekly lows, in all probability, Halliburton is going to break down as well. Take a look at the HAL. Let's bring up the correlation with crude. Maybe I'm wrong. Maybe I'll be surprised. All right, so they've diverged a bit, but traditionally they trade in tandem. Of late, though, the correlation's broken down. So might we see a continuation move higher on Halliburton? Yeah, we may. We may. But you're going to have stiff resistance up here. Not even a 1040. Probably at around 990, thereabouts. If we break out and above this support level here, consolidate, that sets the stage for a filling of the gap, but that's getting way ahead of ourselves at current. All we're looking for right now is for Halliburton to make it up to 990, and there's a lot of selling above. So just be careful. Good volume on Friday. I think it moves higher here. We closed at the highs of the day. Four-hour chart, higher lows. I think we could still rally here. I think there's still more fuel in the tank on Halliburton. Good close. See, the buying into the close is everything. What about the final minutes? Nice close. Final 30 minutes of trade. Nice close. It'll probably move up higher this week. Good volume. Looks good. You want me to go over Works? All right. I did a video on it yesterday. Works. Listen, this is a very controversial trade, and it's understandably so. High risk. And it's a day trader's wet dream, given the volatility. But in short, what we're looking for, assuming that the markets don't gap down tomorrow, is a move up higher on Works. And really, what we're doing is basing it upon how we closed out. Let's just change this up here. Here we go. How we closed out on Friday. So what happened is that you had the press conference, or not press conference, you had the CEO give a conference call. I mean, I listened to it, and it was like listening to paint dry, if you could imagine that. He just wasn't getting to the point. And if you overlay the time frame of when the call was going on relative to the price action, you just saw people, they were excited at first when he started speaking, and then he didn't even get to anything really of newsworthiness, and the shares just started selling off. And you could just tell. You have itchy day traders out there. They wanted their pound of flesh. They didn't get it quick enough. They sold. And what happened the next day? Let's go to the daily chart for a moment. We bounced back. Now, I was long on that call. I just stopped out. Forget about it. Stopped out. And we continued to move down lower to $5.51. I wouldn't have been a bit surprised to see the shares keep dropping. What caught my attention was the fact that we shrugged it off, right? We flashed a bullish Q reversal bar. Then on Friday morning, we get some hit piece coming out of Hindenburg Research. I'm not even going to go into what type of outfit this is. Hit piece. The shares sold off, and then the company came out and reiterated their guidance in terms of sales expectations. They have new orders coming in, and even if they get half the orders, I mean, it's a huge surge in revenues for the company. So the story of the stock looks pretty good, and coronavirus test kits are only going one way, and that's up. So when you do a deep dive into how we closed out the session, we saw buyers come in despite the hit piece and despite the sell-off earlier in the week. The shares rallied in the final 2 hours of trade. Yes, we sold off. Why? Because we hit resistance. Then when you do a deeper dive into a 15-minute chart, on a 15-minute basis, we had broken out. What do? We hit that third standard deviation Bollinger Band. We pulled back. Now what we're looking for is a continuation move higher tomorrow. When am I wrong? If we break down below 579, in all probability, we're going to take out the lows of the week. So the rising 200 period moving average here is critical support, and I would even raise that support level up to $6 per share. If we break down below it and close down below it on a 15-minute, 30-minute basis, it's not going to be a good week for Works. However, if we break out and above $7.49, I think that we could easily see $10 per share, which is our resistance level. So, long story short, that's what I'm looking for on Works this coming week. Thanks, Matt. Yeah, if you can hit that like button, I'd really appreciate it. All right, let's go over AMD. Andy, choose your favorite one, pal. I can't go over all of them, okay? Choose your favorite one, drop it in there, let me know, okay? AMD. I just happened to pull this up on a 15-minute chart. It looks really good. Really nice. Really, really, really nice. So here's our monthly chart of AMD. And we are very close to all-time highs here. Very, very nice. So I'd be looking for a breakout on AMD on a monthly basis. Again, I wouldn't go basing my trade decision on a monthly chart just yet. Too much can happen here. Here's a weekly chart. Here's your trading range between 46 and let's call it $56 per share. Stokes are rising, RSI is rising. So you want to see a breakout here, a retest, and then we could proceed higher. I wouldn't buy them right now. You're right at resistance. Daily chart. You're seeing that resistance level reflected in the share price because we're stalling out here a little bit. Let's overlay weekly resistance on a daily chart. Why is it not showing up? All right, let's go back to the weekly chart. Oh, I know why. Duh. Because I created the resistance level. All right, so I want to make this visible on I have to redo this. Shut me down, man. I'm having some functionality problems here. I wanted to create an alert, and I wanted to show it on a daily time frame, but it's not allowing me to. So we have, in short, let's just do this. What was the high? $57.86. Let's go back to the daily chart. That's good enough. So AMD. Now be careful. I'm putting this on a daily chart, right? But I'm using the weekly breakout as the reason why I would want to get long. You really can't bet on this weekly breakout until it's Friday, and you make sure that they haven't sold it off the highs of the week. So don't get lured into a trap. If you can hold off until Friday near the close, then press the buy button, go for it. You want to make sure we're going to close above this resistance level at around 57.80. HTZ, that's Hertz, isn't it? Yep. Memory's not fading me. Yeah, you're in a sector here that is dangerous. The travel and leisure sector. The only thing positive I could say right now on a monthly basis is that we haven't made a new monthly low yet. That's good. I know it's a very well-run company, but right now they're victims of circumstances. We are leaning into the third standard deviation Bollinger Band, the lower band, which is good. We should probably hold here. But it's weak. You know, it's not in the right place at the right time. We have lower lows on Stokes. Let's drill down. Weekly chart. You're in a trading range. You know, if the shares rally through, I can't believe that these shares are at $6.83. If we rally and close above $6.83 by the close of business next Friday, well then, maybe you have a long trade on your hands here. But I'm not sure what the short interest is. If there's a big short interest in it, maybe you get a short squeeze. Daily chart looks a lot like the weekly chart. The one thing I will say here is that you're possibly seeing a higher low on these Stokes. You may get a higher low W formation, RSIs drifting up. If you wanted to play it this way, you could play it one of two ways. Scratch the edge, right? Buy a few shares, use a stop loss right below $4.76. Then look to add on a close above $6.83. So you're buying, you're adding to your position on a validation that you're accurate in your initial call. And you also want to see RSI breaking out along with Stokes putting in a higher low. Then I would warm up to the trade a lot more. I do like the fact that we're possibly putting in higher lows here on the indicators, and we're consolidating. We've stopped going down. So that's step number one. Let's check out the raindrop charts here. Here's with that. I mentioned this earlier. You get these purple candlesticks, and that's a sign of indecision. So we were rallying, and this was an indication that we would get a trend reversal, and sure enough, we got it. Let's go to a 4-hour chart. Not much to add here on a 4-hour basis, 2-hour basis. You know, it's all the same. It's just consolidating, which is good. You know, it's not breaking. So that's how I would play this trade. All right, we'll do GNL, JP Morgan. Then we're going to circle back with the futures, and then I'm going to sign off. So we'll do GNL. This is a leasing company for what? Jets? I can tell you the daily chart I don't like at all. Real estate? Okay. You know, the best that can be said about the monthly chart is that we're a bit oversold relative to the lower band of the third standard deviation Bollinger Band. That's not enough to get long here. We're off the highs of the month, but we're off the lows of the month. Being off the highs of the month when the S&P 500 is just ripping through the ceiling, you know, that's, and the NASDAQ, I know this is a NASDAQ stock, not good. It's showing relative underperformance. You don't want to buy these shares. If anything, I'd be looking to short them. We break below, let's call it $12.35 per share. At a bare minimum, probably going to come back down and retest these lows, if not break. Daily chart. Yeah, so there's that weekly resistance. Yeah, so here the automated trend lines are picking it up as well. So you have a lot of resistance above. If anything, these shares are setting up as a short. You have a lower high. Friday, bearish key reversal bar. Thursday, an outside reversal bar. This chart is giving you all the signals that it's setting up for a move lower here. So I would avoid these shares, and it's possibly a short. You got it, pal. All right, JPM. All right, so here's what I think they're going to do this coming week. I think that you're seeing momentum dry up a bit on the TripQ name. So where are they going to send momentum next? They already started. You had the small business loans dry up last week. You have Nancy Pelosi holding up a new round of loans. You have unemployment surging, small businesses going out of business, yet what rallied last week? At least Friday? The small caps. What else rallied? After reporting horrible numbers. And they're going to get worse next quarter. And there's a threat of dilution out there of the shares. The banks, JP Morgan. Look at this. Would you ever know that they have to double their loan loss reserves by next earnings period? Would you ever know it? Take a look at it on a weekly basis. We close off the lows of the week. I think what they're probably going to do is they're probably going to move the banks up higher and the small caps up higher as well. They're going to squeeze. What I think they're going to do now is that they've squeezed the big balance sheet names up, the Microsofts, the ones that are your top tier names. They've squeezed the heck out of them, and they'll keep them in check, and they may move them up higher. But where the real movement is now, where the short interest is now, is in the small caps, micro caps, the banks. I was short the banks on Friday in the pre-market. I had to book profits because they were rallying the banks into the closes. What the hell? Screw this. Why am I going to fight this? I know what they're going to do now. They're going to rally the banks. What are they going to do after they rally? They're going to allow them. You had Neil Kashkari come out last week saying the banks need to dilute their shares now to raise cash to provide more loan loss reserves. They're getting ready for a tsunami. Jamie Dimon, do I have it here? Yeah, here's Jamie Dimon. Getting out of Dodge after exiting loans and hiking mortgage standards. JP Morgan stops accepting home equity line of credits. They are battening down the hatches for what they see coming down the road. It is not going to be pretty. So, does that mean you go shorting the banks on Monday morning? No, they're probably going to rally them so they could dilute those shares at a higher price. So I think to answer your question, more than likely, they're going to move JP Morgan, Wells Fargo, Citigroup. They're going to move the money center banks up higher. And what convinced me of it last week was that you have the regional banks coming out this week. And what was rallying, I don't know if it's changed since the last look, but what was rallying were the regional banks. Look what they did on Friday. They were up. This is a leveraged ETF, so they're divided by 3. They were up 26.25% on Friday alone, and they have earnings coming out this week. They don't have trading revenues, so this is purely a loan play. The delinquencies are going to knock the crap out of these companies. So the fact that they're rallying in advance of horrible earnings reports, and the fact that they're going to have to raise loan loss reserves and the threat of liquidity or dilution, they're probably going to rally them. And I think it's nightmarish. I think it's insanity. But that's the game that we're living in right now. Hey, Bob, trying to send a little donation, but the super chat is stuck in Mexican pesos. Not sure its purpose or an issue. Did I just insert an ad? Let me see. I'll have to look into it because I rarely use it. Thank you, though. Where is that super chat thing? Here it is. It's open. There we go. Either way, even if it doesn't work, was there a symbol that you wanted me to go over? You're welcome, TC. Thanks for the comment. Oliver, was there a symbol that you wanted me to go over? Thank you, Trent. Yeah, smash the like button, please. VIX bull flag setup. Interesting. Let's take a look. A bull flag setup I don't know how we can have that. On what time frame? Can't be on a daily or a weekly. DFS? Sure. Franklin, you too, my friend. Be well. You're very welcome. Discover Financial Services. The first thing that jumps out at me is what appears to be a bear flag setup. Or actually a wedge, more of a wedge. Who cares? It's a consolidation. So right now we're in Never Never Land. Let's overlay here some monthly support and resistance levels. See where we're at. Oops. Nothing on a monthly time frame. No weekly support below except for down here. Let's go to a monthly chart. We're off the highs of the month. This one's not looking. This is a daily chart. Again, another wedge formation. You know, if we pull back to $30.88, you want to scratch the itch, put on some shares, okay. But you really need to pay attention to the weekly resistance levels. Actually, no, I screwed it up again. What's the high here? 40.35. Where are we on a daily basis? This is good enough. You get a close above this resistance level. That'll take you above weekly resistance. Yeah, I'll print this out for you. Okay, Baidu. Bank of America is probably going up. They shouldn't. They shouldn't go up. They closed above support last week. If we break down below, here, let's do this. Let's call it 2247. Bank of America becomes a short. Right now, I think they're going to pump the banks up higher so they could dilute shares at a higher price, raising cash so they can increase their loan loss reserves. Because if you thought earnings were bad for the banks this quarter, remember, the crisis only occurred midway through Q1. Now, Q2, we're going to have the full impact of the crisis on earnings. So, if you thought Q1 was bad, Q2 is going to be a catastrophe. So, would I buy Bank of America? No, I'd be looking to short it any chance I got. But now is not the time. Daily chart, they stopped at just short of resistance. If you want to jump into the long side here, I'd have no problem with it. Just use a trailing stop loss order. on a close above 22.28 per share, because it'll probably rally up to, probably you have a good trade on your hands here, a rally up to 29.21, and I would use a stop right below support at around $22 per share. You're welcome, Trent. All right. TAST. Carol's Restaurant. Oh, boy. Not bad, considering the sector. No new monthly low. I mean, you'd really have to look at their balance sheet. Now, how much debt are they servicing? So the monthly chart showing signs of healing, but certainly not a buy. And you have resistance right above here at $3.30. Good week last week. But you have monthly resistance right above. So I can't buy these shares. Not yet. If we close above resistance, different story. Daily chart. Too much resistance, not enough reward. The time to buy was down here on this double bottom setup. I would avoid these shares. I wouldn't short them, but I wouldn't buy them either. You're welcome, Denny. Thanks for joining as always. All right, let's circle back and take a look. BA, I'm looking at BA. I happen to like it as a trade. I looked at it over the weekend. So we have certainly not rallied with the market, certainly underperforming here. Would love to see a retest of the lows. Right now we're in a triangle formation. We're holding weekly support. No reason to go buying just yet because we can most certainly break down. If the market gives way, Boeing is probably going to be one of the leaders to the downside. But if the market holds up here, we may get a short squeeze and pushing Boeing up. And remember, if tensions heat up, if there's an incident, we've seen increasing incidents with the Russians over in the Mediterranean with their fighter jets harassing our spy planes, surveillance planes. If things continue to heat up with the Chinese, you could see a bid under Boeing because they're such a large defense contractor as well. And that may be the saving grace. Daily chart. We broke out on Friday. That's the second time I did that today. We broke out. So this could be a long trade here, which I may be involved with. Members will send out an alert. Nice. Breakout in RSI, breakout on price, good stuff. I like it. You're welcome, Chuck. All right. Let's circle back and take a look at the... You're welcome, Oliver. Let's take a look at the futures. Have we weakened? S&Ps? About the same. Slightly lower. They were lower. They rallied back. NASDAQ 100. They were down below support. They have since rallied back. RSI is still holding support here. Telling you, I think they're going to make new higher highs this week. Not that they should, but they're probably going to. And folks, before I forget, can I ask you to hit that like button, please? Thank you. Small caps consolidating here. No continuation move lower. Let's check out gold. Gold threatening to break down here. $30-minute chart, holding support. Silver, which was up earlier, is now down. And I think we're going to continue lower here on silver. But we are looking to buy the gold miners back. We are looking to buy silver back because after we get out of this bout of deflation, the only thing that's going to stop the Federal Reserve from doing what it's doing, unfortunately, is going to be inflation. And it's probably going to have to be hyperinflation. So you have to own gold, silver, the miners. Have to own them. In the short term, they're probably going to pull back. If you miss the first go around, the first rally, you're going to get a second chance now. Take advantage of it. The dollar gaining steam here. That will not bode well for gold and silver. With that, folks, I'm going to say good night to everyone. Everybody have a great night, and I will talk to you tomorrow. Be safe, please.